SmallCapPower is at the Cannabis Capital Conference presented by Benzinga, and we're talking to one of the most respected market voices, Tim Seymour of Seymour Asset Management. Tim, welcome to SmallCapPower.
Nice to be here. Very exciting day. Benzinga's really attracted a lot of fascinating industry players and companies and investors, so great stuff.
So October 17th is going to be a milestone moment for Canada. What do you make of the excitement surrounding that legalization?
Well, on some level, right, this is going to be an event that's, by the time it arrives, it should be somewhat anticlimactic. There could be some regulatory delays. I think there will probably continue to be some posturing, but it's really more about understanding how the companies are now advancing those producers that I think are in the space and have contracts and have the agreements in place, how they're following through on new production. Let's face it, a lot of players out there, whether it's some of the big guys or whether it's some of the medium-sized players, have made commitments based upon production that they may or may not have in the next couple of years. So it's an interesting time.
So do you sense a lack of confidence in companies who have billion-dollar valuations but are not generating profits?
You've got valuations that in many cases are tough to justify. But the valuations are based upon future production. And I think, obviously, at this point we're 2 days post Constellation Brands and Canopy doing their deal at a 50% premium to a market price and a valuation that people thought was absurd. Well, when that company tells you that it's going to be earnings accretive in 2.5 to 3 years, that's impressive, and that tells you where the growth could be, and obviously that's not even necessarily getting into the more sophisticated evolution of the consumer products nature of the industry, and obviously like Constellation Brands is a CPG company.
Is that Constellation brand deal indicative of what's going to come towards the industry, big pharma, big tobacco?
I think so. I think the question that I'm getting now in the aftermath of that is who's next? And so it makes sense that the alcohol industry is involved, especially when people see maybe more of a first derivative kind of substitution effect, disruption factor. Big Pharma to me is much more interesting because I think it's a much more interesting part of really the opportunity here. One of the reasons I'm excited about investing in this space is the entire biopharma part of this. And if you just think about the impact of OTC, pain relief, sleep aids, there's such a massive disruption here, and it explains why the big pharma companies have been paying off Washington, for example. I'm in the U.S., so, but the same thing's been going on up here. Although obviously, Canada could provide that backdoor for a lot of that. And I think, obviously there are a handful of the big pharma companies that already are doing their research.
What are those essential top 2-3 things that investors, people should look out for in a company when picking a winning bet?
Management's number one. You not only need to have a management team that has vision, but I think the operational performance and excellence and the ability to really show that you can deliver on both your stated production goals, for example, if that's what you are. But I think there are management teams that haven't been terribly transparent with their business. There's obviously been a lot of capital flowing into the sector somewhat blindly, because I think people understand that the top-down trade is exciting, but you're betting on the bottom up. You're betting on management teams. You better have a first-rate management team. And despite the wealth of capital, you better find a company that's got the right balance sheet. So are they capitalized? Do they have the ability to actually execute on a plan? And I think there's a bit of a land grab right now. Some of that will in a couple of years mean that those that were highly capitalized, whether they are the best operators or not, may ultimately be the victors as long as they've allocated capital wisely.
And lastly, how would you respond to critics who like to compare this excitement in the cannabis market to the dot-com bubble?
Well, it's fair. I think there's a lot of money flowing in without people understanding what they're investing in. I'm an emerging markets veteran, 20 years. I've invested in places like Russia and Brazil when you not only had this sense that everybody wanted to be investing in the BRICS and all these countries that had these great demographic trends. By the way, that's the story here, right? It's a consumption trend, it's a demographic trend, it's exciting. and they were just throwing money blindly. I mean, think of, for the market historians out there, a guy like Ike Batista in Brazil built 4 or 5 major resource companies that ultimately went to zero, but at one point was an empire that was close to $1 trillion. I mean, that happened in 2005. We had the commodity bubble, we had the dot-com bubble, so investors always need to be wary about where thematic trends get overdone. And I think this trend is one where the good news is that I don't think that big institutional investors have really joined the party, but I do think that a lot of money has been deployed, and investors need to do their homework on, again, management teams and transparency and corporate governance.
Excellent insights there. Thank you so much, Tim.
Pleasure to be here. Thanks.